Good evening, students. Welcome to the session. Have you revised what we discussed in the last lecture regarding the international taxation? So we had started with the class on the international tax, and were discussing about the residential status of the individuals, and then we started with the residential status of the company. So have you revised or not? Yes? Any questions so far? Because we are going to start solving a question on that area so that you're able to understand the poem concept in more detail, and then we will move on to the other topic. So only if you would have revised, you could be able to solve this question. Okay, so let's start. So you can see the question on the screen and you have to just copy the question. Let me put this question first. Okay, let me just expand the screen a little bit. One second. Yes. So I hope this question is visible to all. A Inc. is a company incorporated in UK. 60% of its shares are held by in India also. The data relating to A Inc. are as under. So fixed assets at WDV for tax purposes, the rupees in crores is given. This is the India and this is UK. Intangible assets, other assets, income from trading operations, income from investments, number of employees resident in respective country. Whether company is engaged in active business outside India test. That's the first point which we have to answer. So yes, please start solving this question. Yes. Whether the company is engaged in active business outside India. Yes. Yes, students, I'm not getting any answers. Whether the company is engaged in active business outside India or not. So for that, what did we see? What were the conditions? The first condition was that the passive income should not be more than 50% of the total income. So what is my passive income over here? Income from trading operations. Is it the passive income? And do you have to take the Indian income, or you have to take the total income, or you have to take the UK income? What do you need to do? Yes. I'm waiting for your answers. Hello. हेलो अशोक जी स्टूडेंट्स कोई है अटेंड नहीं कर रहे क्या लेक्चर? अच्छा, बाकी लिंक और इससे कोई नहीं है जूम पे? ओके, ठीक है. सो यस स्टूडेंट्स, yes, please tell me what is the answer, whether the particular company is engaged in the active business outside India. Yes. So income from trading operations, is it active income? Is it passive income? You have to take the total income. You don't have to look at only the Indian income. Fine. So my passive income is income from the investments. What did I tell you last time? That we have to look at the income from the investments, which is basically my dividend, my rental income, my capital gain, my royalties. All of that would be counted as the passive income. And the income which is from the purchase and sale to the A. So here we will take the passive income, which is income from the investments, which is going to be 30 plus 13. We don't need to look only at the Indian income. We need to look at the total income, students. Are you getting this particular point? So it's not only the Indian income that you will look into, but you will look into the total income. So just write down here. My passive income shall be 30 plus 13 students. And what will be my active income? Good evening, Ginny. Yes, what will be my active income? Yes, what is the total of my active income? Yes, students. So this will be 15 plus 42, right? So divided by 15 plus 42 plus 30 plus 13. So you need to look at the total income. That means passive income should not be more than 50% of my total income. Isn't it? So how much is it come to? Yes. How much is it coming to? Can you give me the answers, please? What is the answer to this? 43%, isn't it? So this will be 43%. Right? What is my second test? The asset test. So intangible assets and other asset information and the fixed assets at WDV are given to me. So what is the condition? That the assets in India should not be more than 50% of the total assets, right? For the passive income and the total income, you will look at the all the combined income in India, outside India also. Because the passive income should not be the income only you are looking at from India. It should be the total global passive income that you are looking at. It is not saying that you only look at the Indian income. But for the asset, the criteria is that the assets in India should not be more than 50% of the total assets. Are you getting this point? So what are my fixed assets in India? 90. So asset test will be 90 plus 40 and plus 30 is the other assets. I will take all of this. Divided by my total assets. Total assets is 90 plus 70 plus 40 plus 180 plus 30 plus 90. This comes to how much? Yes, 32%. This will come to 32%. So this test is also satisfied. What is the other test? employee test. Now, what they have mentioned is number of employees resident in respective country, 40 and 60. So, 40 divided by 100, right? Which is like 40%. So, even this test is not satisfied. Next is the payroll expense test. So, what they have said is for the payroll expense, have they given any information? So payroll expense, they have not given any information. So we can assume it is satisfied. We can assume it is not satisfied. So based on that, we will write the answer. So they have not given information. So no information given. So we are assuming this is satisfied. Right? So ABOI test is satisfied. Now they have given some other information. See, this is the past exam question. What information they have given? Because of the increased operations, more manpower is required. So 30 more employees may be required in this regard. The company take these employees either directly on its payroll or can outsource the operation to the external agency, which will engage the 15 employees in its role and finish the work, which will be the better for the company. So yes, Jimmy, I understand there is absolutely no problem. Please take care. Yes, so what will happen in this case, students? So what they are trying to say, student, is that the company, because it is having a need of additional manpower, it may require 30 more employees. Now the company has an alternative that it can hire 30 people on its payroll, or it can outsource this particular task to the external agency. You know, there are these HR companies, right, which generally hire the people for you. So those then will work as kind of freelancers, but they will work what the employees would be doing. So basically they will be performing the tasks which are similar to what the employees are performing. Now, if you recollect, I had a point given to you. I had this discussion with you on the same point. So here the company is seeking your answer, your opinion, that what is better for the company, whether it should engage 30 employees on its own payroll or whether it should hire 15 employees externally. And would that have any implication on the OM applicability? Meaning the company is trying to understand that in case we recruit 30 more people on our payroll, will it be the case that the poem may get triggered in India because of not satisfying the employment test or the employees test? Or if we hire 15 people as a freelancer through some external agency, then in that case, will that prevent the applicability of the poem? That is the question that the company is seeking your answer on. Now, if you recollect, in the ABOI test, what we had the discussion around this point. Can somebody recollect this point? Yes. Let me see who answers. We had a very elaborate discussion on this particular point. What is the meaning of the employees under the guidance, under the guidance which is given by the CBDT? What is the meaning of the employees that they have set? Yes. So the condition is that not more than 50% of the employees should be situated or are resident in India. But what is the meaning of employees? Let me show you from your module again. I think most of you have forgotten. The number of employees means the average number of the employees as at the beginning and at the end of the year, and shall include the persons who, though not directly employed by the company, perform the task similar to those performed by the employees. So now my question to you is, in case the company does not hire 30 people on its payroll, will those 15, the freelancers which the company is intending to hire through some external agency, will it be considered as employees for the purpose of determining the employee test here? Yes, read carefully and answer me. Yes. Yes, what will happen in this case? Yes, Prashant, very good. Yes, it will include the independent consultants or the contractual labor who is performing the task similar to the employees. Prashant, I'll request if you can join through Zoom, you can better participate as well. So yes, you are absolutely correct. Yes, Prashant, they would be taken into calculation of the average number of employees. So in the question, it is indifferent for the company that whether they hire 30 people on their own payroll or they hire the external consultants, because the company can, the number of employees will still include those 50. So it's just that, number matters, that 15 employees versus 30 employees. It doesn't matter whether they hire on their own payroll or on the payroll of the some other external company. So employees not only means the employees directly hired, but the personnel performing the task similar to employees shall also be included. Is this point clear to everyone? Yes or no? Yes? Okay, perfect. So then we move towards the another question. Let's solve one more question on this particular point itself. Let me share the screen again. Second. I think that 1 second it says stop. Yeah. So ABC Limited, an Indian company set up in the Germany. 1 second, now there's some problem with this app. I'm sorry, students, there's some technical glitch on the app that I'm using. Please hold on. Yeah. I'm so sorry for the technical glitch. Yes. So ABC Limited, an Indian company, was set up in Germany, ABC Inc. on 1st April 2004. The subsidiary company is mainly engaged in the software services, hardware services, etc. in 3 different countries: Germany, UK, and India. The following information is furnished by ABC India for financial year 24-25. So they have given the information with respect to the 3 countries: value of assets as per books of accounts in crores, number of employees working in thousands, and the payroll expenditure in crores. Total income earned in aggregate, rupees 28 crores is 80 crores, and the 28 crores is derived from transactions where purchases are made from A and sold to non-A. 24 crores derived from transactions where both purchase and sale are made from or to A. Rupees 16 crore derived from transactions where purchases are made from non-A and sold to A. 8 crore by way of income from CG and 4 crore by way of interest. During the financial year 24-25, total 5 board meetings were held, 2 in India, 1 in Germany, and 2 in UK. You are required to determine the poem of this company in India. No problem, Prashant. I understand. That's absolutely all right. Yes, please tell me. Determine first of all about the active business outside India test. Yes. Yes, please tell me about the active business outside India test, whether the income test is satisfied. Yes or no? How much is the passive income, students? Yes. So you have the 80 crores as your total income, out of which what is my passive income? Twelve CR, Jini. So 28 crores are derived from the transactions where purchase are made from A and sold to non-A. So obviously this is not my passive income. 24 crores are derived from transaction where purchase and sale are both made to A. So that is my passive income. 16 crore are derived from transactions where purchase are made from non-A and sold to A. So again, that is not my passive income. 8 crore by way of income from CG and 4 crore by way of interest. So 12 crore plus 24 crore. So that will be my passive income. Are you getting this particular point? So my passive income is 12 plus 24 crores. So 36 crore divided by 80 crores, which is my total income. My passive income, whether it is less than 50% of my total income? Yes or no? Yes. Yes. Whether the test is satisfied? Yes. It is not satisfied because it is satisfied. If it is less than 50%, it is coming to 45%. So therefore, this test is satisfied. What about the asset test? 24 is in India. 24 crores are in India. And how much are the total assets? 60 crores. So 24 divided by 60 crore into 100%, which is coming to 40%. So even that test is satisfied. Then employee test. So we have 28 employees in India, whether this test is satisfied or not. Yes. Yes, Prashant. It's coming to 41%, not 40, 41%, the employee test. So yes, even that test is satisfied. So less than 50% of employees are in India, less than 50% of assets are in India, right? What about the payroll expenditure test? Whether that is also satisfied? Yes, Prashant, right. What about the payroll expenditure test? Yes, Ginny, correct, 45%. So even that is satisfied, right? So therefore, yes, Kirti, correct. So therefore, the ABOI test is satisfied. Now, once the ABOI test is satisfied, what do you look into? Yes, once you satisfy the ABOI test, what do we look into? Yes, students. Yes, please. Yes, poem. Then what in poem, Ginny? What do we look into? So if the ABOI test is satisfied, Prashant, we say that the poem shall be presumed to be outside India if the majority of the board meetings are conducted outside India. Yes, so there is a presumption which is given, isn't it? So what did we discuss last time? We discussed that in case the ABOI test is satisfied, the poem shall be presumed to be outside India if the majority of the board meetings are held outside India. So at the first instance, there is a presumption which is created. Now in this question, where are the majority of the board meetings conducted? Yes. Where are the majority of the board meetings conducted? So out of the total 5 board meetings held, 2 were in India, 1 in Germany and 2 in UK. So what is the presumption that you will make? Yes. Yes, please. Where are the majority of the board meetings conducted? Yes, Ginny. Poems shall be outside India because the majority of the board meetings are outside India. So 3 meetings out of 5 meetings are conducted outside India, and therefore the poem shall be presumed to be outside India. Yes, Keith, correct. However, there was a caveat attached that in case it is found that the Indian resident or the Indian parent company has the de facto decision-making authority, then in that case, it will be considered that the poem is in India. But when there is no information given about that aspect, so we will consider your poem is in India. Is the poem concept to you clear? Yes. Yes, Prashant. Is the poem concept clear to everyone? In case you have any questions, please feel free to ask me. We had also done the transitional provision wherein I had told you what shall be the tax rate for such a company whose poem is in India. What will be the tax rate, students? Yes. What shall be the tax rate? For a foreign company whose poem is in India? Yes, 35%. Very good. So the tax rate will be 35%. Are we clear? It will not be the 25, 22 or 30% or 15%. It will be 35%. So I'll give you the notes now. We had discussed all of this in the last class, but we will write the notes for this now. Okay, so just write down for the poem firstly. Write down here that following factors would not lead to following factors would not directly lead to the conclusion that place of effective management is in India. What will be the factors? The fact that foreign company is wholly owned subsidiary of the Indian company. Second, the fact that foreign company has a permanent establishment in India. Number 3. The fact that one or some of the directors of the foreign company reside in India. Number 4, the fact of local management being situated in India. And the existence of support functions in India. So, the determination of poem is to be based on all the relevant facts relating to the management and the control of the company. So these factors will not automatically lead to the conclusion that the poem is in India. Are we clear? Yes or no? Yes. Is this clear, all of you? Okay. So I'm just giving you the notes for this for your revision purposes. So you can just make all these summaries with you. So what is important for the poem? You need to see whether the company has satisfied the ABOI test. If the answer is yes, the poem shall be presumed to be outside India if the majority of the board meetings are held outside. The exception is if it is controlled by the Indian resident or Indian parent company, then poem will be considered in India. If the ABOI test is not satisfied, then you need to ask who is taking the key decisions and where are those key decisions being made. Whether it is the board of directors, so you take the location of the board of directors, or if the board is not exercising the authority, then whether it is the location of the senior management or some executive committee, right? In case the shareholders are deciding, so then the shareholder, if they are taking the decisions and the board merely ratifies the decision. Also, what will be important is the location of the head office, HO. So, location of the head office is also a key factor. If the management and support staff are usually based in one location. In case they are not based at one location, then where the senior management is sitting, that will be a place which will be important. In case through the video conferencing the meetings are conducted, then it will be the place where the directors usually reside who are taking the decision. Location of HO is for basically if the centralized business is there. Are we clear? Yes or no? Now, in terms of the transitional provision, just write down. The transitional provisions are given under the separate chapter itself, which is chapter 12 BC or section 115 JH. So what did we learn that day with respect to the transitional provision? With respect to the determination of the WDV. With respect to determination of WDV, if the foreign company is assessed to tax in the foreign country, then what will be my WDV? WDV as per the tax records. And if the WDV is not available, as per tax records, then you will arrive at WDV by applying notional depreciation, right? As per the foreign country tax law. And if the foreign company is not assessed to tax, then you take as per the books of accounts. Then you take as per the books of accounts, right? Then next one was the maintenance of the balance sheet and your P&L. So what did we discuss about this? The period of the books of accounts, the period of the balance sheet of P&L, what you will take if the foreign country's financial year is not 31st March. So what you will do is, first of all, it says that the foreign company is required to prepare P&L and balance sheet from the period of accounting year start to 31st March. That shall be one period of preceding previous year. And then and of 1st April to 31st March. Okay. So you have to prepare two P&L. One is up till the last year 31st March, and then for the succeeding period of the 12 months, which is April to March. Till the year the foreign company remains a resident in India on account of POEM. Now, if this period is, so if the period is less than 6 months, then in that case, what you need to do is, for example, the accounting year is calendar year. Right? This is example. So in that case, let's say that, for example, you have from 1st Jan to 31st March 24, and then you have 1st April 24 to 31st March 25. right? So therefore, what you will do is, here you will include this particular year, include with the succeeding year, right? So therefore, here we will prepare for 1st Jan 24 to 31st March 24. If it is more than 6 months, for example, it is starting from, let's say, July to June. Okay. So let's say, for example, it is from accounting year is July to June. Okay. So let's say it is required to then prepare for the period 1st July 23 to 31st March 24, and then from 1st April 24 to 31st March 24. So then it will be separately prepared. Okay. Then you have the separate P&L prepared. Clear? The third point was the brought forward business loss. So what did we discuss about that with regard to the brought forward business loss? So if the foreign company is assessed to tax, then as per the tax records. If foreign company is not assessed to tax, then as per the books of account. What additionally I discussed with you regarding the allowability of the brought forward business loss and unabsorbed depreciation? What were the two additional points that we discussed? What is the period for which you can carry forward the brought forward business loss? Yes, let me see who remembers.
Ma'am, 8 years.
Sorry?
8 years, ma'am.
No, not for the fresh 8 years, but for the remaining period. So 8 years will be taken from which year? From the year in which the loss occurred, and not from the year in which the company became the resident in India. So the period of carry forward of brought forward business loss. See, unabsorbed depreciation can be carried forward indefinitely. But as far as the brought forward business loss, so this will be for the balance, or you can write a remaining period of 8 years. That is from the year in which loss occurred, and not from the year in which company became resident of India. What was one more point with respect to the allowability of these laws against the income in India? What did I tell you? Is it allowed against all the income? Yes, Prashant, right. It shall be allowed only against the income. Only against the income which has become chargeable on account of it becoming the resident in India. So, this is brought forward business loss plus UAD, both. So, this will be allowed to be set off only against the income which is chargeable to tax in India on account of the company having OM in India on account of the company having OM in India or the company becoming resident on account of OM in India. So we had done an example for this also, students, if you recollect. Yes or no? We had done
Yes,
one
ma'am.
example. What was the
इंटरेस्ट का
example that
करवाया
we
था.
discussed? Yes,
Yes, मैम करवाया था एक इंटरेस्ट में जिसमें था
correct.
something.
Correct. So therefore, if you have the company becoming the resident of India only against that income, I will consider this as chargeable. So I'm just repeating again. Let's say, for example, if I have the Indian income, or let's say I have the income from branch in India. This is, let's say, rupees 2 crores. I have US income. Which is, let's say, rupees 5 crore. I have the brought forward business loss in US of rupees 6 crore. So how much I will be able to set off? So I will be only able to set off rupees 5 crore. Right? Because this is the income chargeable on account of company being resident. This was the income which was taxable irrespective of company is resident or not. Isn't it? So this 2 crores was any which way taxable because this income was accruing or arising in India. Isn't it? So for a non-resident, any income accruing or arising or deemed to accrue or arise in India is any which way taxable in India. Isn't it? So this income was any which way taxable. So this 5 crore was arising outside India. This is becoming taxable in India because now the company has become resident of India. So only against this income we will allow 5 crore. We will not allow the set off of 1 crore against this income. Are we clear? Then the TDS will be as per which section? Section 195. The TDS will be still covered under 195 and not 194 JC, all of those sections. Tax rate shall be 35%. Yes or no, students? Is this clear? Any questions? Any doubt? Yes? Yes or no? Is the concept of residency clear to everybody? Any questions anybody has? Fine. So now we have completed the first part of our Nexus rule that we started with. So how does a country has the Nexus in a particular country? What did we discuss? What is the Nexus based on? How does a country gets the jurisdiction to tax an income? Yes. How does the country have the jurisdiction to tax?
मैम सोर्स पे
Yes.
टैक्स लगता है.
Source and then the residency. So we have finished the residence, right? We have seen the residency for the individuals, for the HA, for the firm, for the company. That is one way. So a country can tax its residents, global income, and that is how the country derives the nexus. Because you are my resident, I am providing you as a country the infrastructure to stay, to work. So therefore, I am collecting the tax as a service charge for providing these benefits to you, isn't it? Although in the tax it is said that there is no quid pro quo, meaning that there is no direct benefit that you see out of the taxes that you pay. But in actual, you are paying the taxes as citizens of this country for the services that the country is giving you, isn't it? The second way a country will levy the tax is because you have generated some income in a country, meaning you have the source in a particular country. So for a non-resident, a country can tax a non-resident only when that person has the source of income in that country. Do you recollect this point? Yes or no? So we had started with this particular concept itself, that there are two connecting factors that we look into. So one is the residence and second one is the source. Now we are moving towards the source, meaning now we will be talking more about the non-residents. We have touched upon the residents. Who are the residents? For the residents, the global income is taxable, except in the case of, yes, for the residents, the global income is taxable except for, yes, fill in the blanks, except for the residents, the global income is taxable except in the case of, yes,
ordinary.
sorry,
Non-ordinary, ma'am. Non-ordinary.
Yes, not ordinary resident, absolutely. So except in the case of not ordinary resident, you don't have the global income chargeable to tax. For a not ordinary resident, only the Indian incomes are considered, except the foreign income if it is from the business control or profession set up in India. Otherwise, the foreign incomes for RNOR are not taxable in India. Are we clear? Now we are moving towards the non-residents. When can a country tax the non-residents? So for that, we had discussed about section 5 of the Income Tax Act, the scope of total income. Now just look at the NR for this moment. What does it say? Income accruing or arising. What do we mean by the income accruing or arising in India? What do we mean by the income accruing or arising in a particular country? When can we say that the income is accruing in this country? So accruing refers to the generation of the income. Now let me give you a few examples for you to understand and tell me whether the income accrue in a particular country. For example, there is one non-resident, let's say, who is a resident of USA. Now this resident of USA is there. He's working in USA and he has a property in India. Right? Now he was looking out to rent a property and he tells his friend that, look, I have a vacant property in Mumbai and I'm intending to let it out because now I'm staying in US. So that friend says, oh wait, there is another person who is, my friend who is also in US, but he's looking to take a property on rent in India, in Mumbai, for his parents. So he says, wow, that will be great for me because I am also looking out to let out my property. And if you have some known person, it is always good. So, let me just connect it to that person. So both of us agree on a particular rent. And this Mr. A agrees to give his property on rent to Mr. B for using the property for his parents. Now the property is located where? In India. But the tenant and the landlords are located where? In US. The contract is also getting signed in US because both of them are based there. And they agree that instead of, Mr. B paying the rent in INR to him, he will pay in US dollar because it's convenient for Mr. A also to receive in US dollar because he is also now based in US. So, unnecessarily, if he receives an INR in India, then he will have to send back to US and there will be conversion charges, processing charges of the bank. So, in order to avoid that, they agree that, we pay the rent in US only. And the deal is signed. Now, the rental income that Mr. A is generating from Mr. B is getting from Mr. B. Where is the source of this rental income? In US or in India? My question is to you. Where is the rental income arising? Where is the rental income accruing?
Ma'am, it will be deemed to accrue in India.
Sorry?
Ma'am, it will be deemed to accrued in India.
It will be deemed to accrue or arise in India. But at the first place, whether it is accruing in India, deemed, okay, fine. You are correct. But whether it is accruing in India or it is accruing in US. Where is it accruing?
Ma'am, accrued outside India.
Okay, outside India. So what is the basis that we are looking at to determine where is the income accruing?
मैम क्योंकि लैंड इंडिया में सिचुएटेड है तो इसलिए वो डीम टू अक्रू इन इंडिया मानी जाती है.
Yes, you are right, absolutely, Ankit. But my question is still, this income is whether generating in India just because the land is situated in India or the building is situated in India, or the income accrues where the contract is signed. Where does the income gets accrued? Where the contract is signed or where the land or the asset is situated? Now, there is no clear answer to that. The Act just uses the word accrue or arise, but it does not define what do we mean by accrue or arising. But the general understanding is that the accrue or arise means that where the income is originating. Are we clear? But this is very vague because it is not defined and therefore it could lead to a lot of litigation as to what do we understand by accrue? What do we understand by arising? Where does the income accrue? Where the person who is paying the rent is located. Now, for example, this person, Mr. B, was located in US. Had it been located in Singapore? Well, Singapore can also say that the income accrues in Singapore because the payer is located in Singapore. Property is located in India. The contract is signed in US. The landlord is based in US. So, there is no clear answer as to where the income arises because there is no definition of the arise or accrue. So, are you understanding the problem with that? So, this leads to a lot of litigation. Now, is there a difference between the accrue and the due? Because under section 14, under section 15, sorry. What is section 15 first of all?
Salary.
What is section 15?
Salary.
Salary. So for the chargeability of the salary, it says any salary due from an employer. Is there a difference between due and accrue?
Yes, ma'am.
What is the difference?
मैम accrue जो होती है वो डेली बेसिस पे होगी एंड मैम ड्यू मैम जब उसे देने की लायबिलिटी बनेगी तब.
Perfect. So the legislature has thoughtfully used the different words at different places. Accrue is the income, let's say for example, when you're working on a daily basis, so your income accrues each day you are rendering the services to the employer. So let's say for example, if out of 2 leaves entitled to you, you are taking 4 leaves in a month. So for those 2 leaves that you've additionally taken, which is beyond your contractual understanding with the employer, for the 2 days that you have not worked, the salary does not accrue to you. So the salary accrues every day when you are rendering your services. Whereas the due is basically, can you demand the salary mid-month? Answer is no. If the contractual terms suggest that the salary will be paid to you, let's say on the 5th of every month or 10th of every month, the salary will become due on that day. So when you can file a case against your employer if he has not paid the salary to you, that is when the salary becomes due. So it becomes due when you have the right to enforce the payment. Whereas accrual is basically every day. So you cannot just sue your employer if he doesn't pay you every day, because the salary is not yet due. The salary will become due only on the 10th of month, or the rent will become due only on the first day of the next month. It will not be due throughout the month, but the rent will get accrued throughout the month because I am utilizing the premises. Is the understanding clear? So here, for section 5 purposes, the income accrue or arises. For example, interest accrues on the FD throughout the tenure of FD, but it becomes due only on the maturity of the FD. Are we clear about this? Yes or no? Fine. Now, what is then deemed to accrue or arise? Prashant, you have a question, but without occupancy of property, how can there be income? No, if the property is not occupied, even if you have taken on rent, whether you occupy it or not, that's a different story. But if you have taken a property on rent, the rent will be accruing for it. Yes, outstanding is basically due, Prashant. You're right. So, now what is deemed to accrue or arise in India? So, section 9 of the Income Tax Act talks about the deemed to accrue or arise in India. Now, this is whom we are talking about. We are here talking about a non-resident. For a resident, does it matter whether the income is accruing or arising or deemed to accrue or arise in India? Yes. For a resident, does it matter? For resident, section 9 is relevant or not? Yes. For a resident, section 9 is relevant or not? Yes. For a resident, is this section relevant at all or not? That's the question. For resident, yes, Chini, you are right. The global income is taxable. So this section 9 is irrelevant because any which ways, whether the income accrues or arises in India or not, the income will be taxable in India for resident. So section 9 is not at all relevant for the resident, except in the case of the RNOR. For RNOR, this will still be relevant to determine whether, because for the RNOR, only the income accruing, arising, deemed to accrue or arise in India is taxable. So this is also relevant for RNOR, but not at all for ROR. Are we clear? Now, section 9, which is deemed to accrue or arise in India. Yes, Prashant, right. Now, section 9 is basically the source rule which is provided in the Act. So since we do not have any definition of when can we say that the income accrues or arises in India, we have the principles under section 9 which says that the following income shall be deemed to accrue or arise in India. So section 911, first one, it says all income accruing or arising. See, again, they are using the words accruing or arising without even defining it. So when they are saying income is deemed to accrue or arise in India, in that also they are saying all income accruing or arising, which basically suggests that they are trying to say any income which is getting generated in India, whether directly or indirectly. So not only directly, but even indirectly, through or from any business connection in India or through or from any property in India, or let me write it like this. Or through or from any property in India or through or from any asset or source of income in India. Or through the transfer of a capital asset situated in India. So basically, there are these 4 subclauses to 911. All income. They are saying all income. So therefore, it should not be any capital receipts which are not chargeable to tax. It should be an income. Income is defined under 224. So not all receipts arising from the property in India. Say for example, if you sell the property, whether you will consider entire sale consideration as income, the answer is no. Because the entire sale consideration is not income. Your income is basically what? The sale consideration minus the cost. Right? Because first you have to compute the income as per the section 14, which is under the different heads of income. Because income is after the expenses only. It's not the gross receipts. Right? So it is not the gross receipts, it's gross receipts minus the expense. That is your income. So all the income accruing or arising basically means that it is getting generated in India, whether directly or even indirectly, through or from business connection in India, property in India, asset or source of income in India through the transfer of capital assets situated in India. Now, first we will not take business connection. We'll take that after break. We'll first talk about the property in India. So the example that we were talking about, right? That the property was located in India and there were 2 non-residents who had agreed to take that property on the rent from each other, right? So Mr. A had let out his property in India to Mr. B. The contract was signed outside India. The payer was located outside India. The landlord the amounts were paid in the US dollar in a bank account outside India. Now, one could argue that the income does not accrue or arise in India because the contracts are executed outside India.
The payer who is making the payment is outside. However, Section 911 says that any income which is accruing or arising through or from the property in India. Now, this rental income is arising from the property in India. So, therefore, this income shall be deemed to accrue or arise in India. So, what do we understand by the term property? Property again, if you remember, this term was also used under Section 214 of the Income Tax Act. This term was also used under 214. What was 214? What was 214?
Ma'am, capital asset.
Capital asset. So what was capital asset? Capital asset means property of any kind. Do you remember? So what is property? There we had discussed property means the bundle of rights. So it is not only the physical property, but it means the bundle of rights. Yes, Jin. Right? So therefore, the property would not only mean a physical building or a property. It will mean that there are bundle of rights here. So any kind of rights can get covered in the property. Then it says asset or source of income in India. Through or from any asset or source of income in India. So if any income is arising from any asset in India, for example, dividends, interest, your royalties, right? So any asset, it could be tangible, it could be intangible. It doesn't say anything like it should be only a tangible asset. It could be any asset. It doesn't even say it has to be a capital asset. It just says asset. So through or from any asset in India or a source of income in India. Now, what is source of income? That is not defined. It could be the payer here in India. It could be the contracts here executed in India. So it's a very, very wide term. So if it is arising from any source of income in India, then it will be deemed to accrue or arise. Are we clear about this? Yes or no? Fine. Any questions before we go on to the break? Yes, Prashant, property is bundle of rights. That's right. Okay, so if there are no questions, let's take a break of 10-15 minutes and then we get back with the business connection and those concepts. Fine, let's take a break of 10 minutes. Ashok ji? Yes.
connection. So, what is the meaning of the term business connection in India? So, business connection is not a defined term. But, there is this, let me tell you, a concept, which is like doing business in India versus doing business from India or with India. So, basically, what is the distinction between these two terms? I'm writing on the screen. Do let me know if you see any difference between the two. So, doing business with India versus doing business in India. Can you identify the difference between the two terms, with and in? Yes. Is there a distinction between the two? What do we mean by doing business with India versus doing business in India?
Ma'am, here doing business with India, maybe here any foreign company like the Maruti and Suzuki.
Yeah.
तो यानी जो सुजुकी है it is a foreign company and Maruti is Indian company and they are doing business. So we can say that doing business with India. The foreign
Okay.
company is doing business with India.
Hmm.
And
Okay. And in India?
any foreign company having any branch or any it's a particular its own company established in India.
Right. You have absolutely captured it well, Ginny. So basically, doing business with India, if I talk about, so that means that, I am kind of remaining outside India. I'm transacting with any Indian company, or maybe, I'm just supplying some goods from outside India on the FOB basis, basically, where the risk and the title to the goods just transfers when I'm just putting the goods on the FOB basis, basically, where I'm just giving away the goods, right, on the port or on the seashore, whatever it is, like whatever mode of transport we choose. So that is something where the supply is taking place outside India, right? Where the supply concludes, where the sale of goods concludes outside India itself. So those are the instances, or maybe, kind of services which I'm providing from outside India, maybe virtually. So those are the things where I'm saying that I'm doing business with India. Maybe the customers are in India, maybe some company is availing the services in India. The payer is just in India. So whatever it is, it's just doing business with India. Versus when I talk about the doing business in India means I have a more presence, a substantial presence in the country, where I'm actively engaging in the activities conducted in that country. So that is the meaning of doing business with India. Yes, Prashant, doing business in India meaning having some amount of presence, establishment, branches, subsidiaries, whatever it is, right? So that means that there is a substantial presence which is there. Now, business connection term which is there, it denotes doing business, one second, yeah, in India. So business connection means what? That there has to be some connection between the income which is getting generated and the activities that are carried out in India. So since business connection is not defined, the judiciary over the years has tried to interpret this term.
And it has been held in several cases. In one of the very old and landmark case of R.D. Agarwal, Supreme Court had held that business connection means that there has to be a substantial link between the activities carried out in India and the income arising from those activities. Right? Secondly, it should mean that it should not be an isolated or one-off transaction. It should be a recurring transaction. That's what, if you remember under 28 also, business means that there is not an isolated activity, although it includes the nature of adventure in the nature of trade as well. But it should be a recurring transaction. It should be a kind of an organized activity. It should not be an isolated transaction. That's what is the meaning of the term business connection, which is discerned over the years by the judiciary. The Income Tax Act includes the explanation 2 to section 911 to say that what does business connection includes. So it says that the business connection includes the following transactions. So what are the transactions it includes? So meaning it just says that what does business connection include? It doesn't say business connection means only this much. Business connection is not defined. The explanation 2 which is there just says that business connection includes the following. Now, what does it say? That the activities carried out through a person acting on behalf of the non-resident. Let me show you the act itself. Yes. So if you see the explanation 2, for the removal of the doubts, it is hereby declared that the business connection shall include any business activity carried out through a person who is acting on behalf of the non-resident. So means a person who is acting on your behalf. What is he called usually? Agent.
Agent.
Right? So, agent of a non-resident. So, any business activity carried out through an agent. That's what in the simpler language it would mean, isn't it? So, we'll just write it over here. Business connection include the business activity carried out by an agent. Right? Now, what are the conditions for saying that this person is the agent of the non-resident? And why is this included in the business connection? See, if you have, or if you, not if you have, obviously you have already done contract law as a part of your CPT and intermediate syllabus. So if you remember, there was this concept called any act which are done by the agent are as if done by the principal himself, or are considered as if being done by the principal itself. So the acts of the agent bind the principal. In the Latin phase, it is called as qui fecit per allem fecit per se, which means any act done through the agent are considered as if these are done by the principal. Isn't it? So therefore, if the principal himself is not conducting the business activity, but he has appointed some agent in India for conducting those business activity, that agent who is conducting the business activity will constitute the business connection for the non-resident in India. Right? Now, who is that agent? has and habitually exercises in India an authority to conclude the contracts on behalf of the non-resident. Meaning, there is this agent who has the authority in India to conclude the contracts on behalf of non-resident. What does it mean in simpler terms? Let's say, for example, there is an agent appointed in India for doing the sales activity. Now, he reaches out to the customers, signs the contract, or gets the conclusion of the contract, then sells the goods on behalf of the non-resident. He has all the authority to undertake the sales activity in India. This will lead to that person considered as an agent of the non-resident. But he should be habitually exercising that authority. It should not be an isolated event. As I told you, business connection does not include the isolated activity. Meaning, for example, it should not be the case that, let's say, for example, if there's an urgent sales order which is coming up and the non-resident is not available and he asks his agent to, undertake the contract, sell the particular goods. So therefore, in that particular case, that will not be considered as an agent. So he should not only have the authority, but he should also be habitually exercising it, meaning more often than an isolated transaction, regularly exercising that authority to conclude the contracts on behalf of the non-resident, or habitually concludes the contract. Meaning, even if he does not have the specific authority given, but he is the one who is habitually exercising the or is regularly concluding the contracts in India. Right? So just write this much first. So an agent who has and habitually exercises authority to conclude the contracts. Right? Then, or habitually concludes the contract. Secondly, now what these non-residents do is, in order to avoid constitution of the business connection in India, what they try to do is they try to prevent the agents from either concluding the contracts or, just giving them any sort of authority which leads to the fact of concluding the contracts on behalf of non-resident. Meaning what they will do is they will ask agent to go and meet the customers, to identify the new customers, to negotiate all the terms of the sale, to even decide the pricing of the commodity. But please do not conclude the contract. Do not sign the contracts. Do not conclude the sales, at least on paper. What you will do is you will just send us an email that this is so-and-so customer and wanting to sell the good, purchase our goods, and this is the price that we have decided, and the contracts will then be concluded by the non-resident itself. So that we will not fit within this particular clause E. We can say to the government or to the tax authorities that, look, this particular agent is not concluding the contracts in the technical terms. He's just meeting the customer, negotiating the pricing, deciding every other terms of contract, but he's not concluding the contracts. So this is how many of the non-residents were able to avoid the constitution of the business connection. So there is a similar term under the tax treaty, which is the permanent establishment, which also has a similar clause. So even from the tax treaty perspective, the non-residents were able to avoid the permanent establishment constitution also. So in the act, you have the business connection, and in the tax treaty, you have a permanent establishment. which is nothing but the equivalent term of the business connection in the tax treaty. So, by this way, they were able to avoid the constitution of a source in India. And this was all across the globe. In every country, there is almost a similar definition of the permanent establishment or business connection. So worldwide, they were able to avoid the definition of the permanent establishment. Are you getting this particular point? So this was leading to the tax avoidance, isn't it? Because if you do not have business connection in India, obviously your business income will not be taxable in India because your agent is not technically concluding the contracts in India. So this was a major tax avoidance concern which was felt. And therefore, at the level of the OECD, they realized this particular loophole in the law and they suggested that all the countries across the world amend the tax treaties as well as their domestic tax law to introduce that even if the agent is not concluding the contracts formally, but doing all the other acts which are leading to the conclusion of the contracts, then in that case, the agent will be considered to constitute the business connection or the permanent establishment. So all the tax treaties of India were amended, and so India also amended the domestic tax law, which is the Income Tax Act, to align it with the international principles. And what did it introduce? This particular phrase. So this phrase was not there prior to 2017. So what does it say? Or habitually plays the principal role leading to the conclusion of the contracts by that non-resident. Meaning the agent is not concluding the contract, but the principal is doing that. But he is playing all the role, principal role leading to the conclusion of contracts. Meaning he is just not concluding the contract formally, but he is doing everything which is resulting in conclusion of contract. And whether or not the contracts are in the name of non-resident, whether or not the contract is relating to the transfer of the ownership of or relating to the granting of the right to use property owned by that non-resident or that non-resident has the right to use or for the provision of services by that non-resident. So whatever contract it relates to, it will be resulting in the business connection for the non-resident. So is this clear? Yes or no? Yes or no? Is this point clear? Fine. Okay. So this is the part B. It says that the agent is concluding the contract on the behalf of non-resident or is playing the principal role leading to the conclusion of contract by the non-resident. Then B has no such authority to conclude the contracts. But this agent habitually maintains in India the stock of goods or merchandise from which he regularly delivers the goods or merchandise on behalf of the non-resident. So meaning he is not concluding the contract, but he is maintaining the stock of goods and regularly he is maintaining, so habitually he is maintaining, and from which he is also regularly delivering the goods on behalf of non-resident. So habitually maintains the stock of goods from which he regularly delivers. Next is habitually secures the orders in India mainly or wholly for the non-resident, or for that non-resident and other non-residents controlled by or subject to the same control as that non-resident. Meaning, it is habitually securing the orders for the non-resident. Mainly or wholly for the non-resident. So mainly or wholly means that, if he's an agent, he is more than 90% of the activities are focused towards securing the orders for one non-resident. He will constitute the agent. So basically, mainly or wholly means what? Substantially for one non-resident. And the judiciary has said that, it should be more than 90%. Mainly or wholly denotes more than 90% of my income is arising with respect to one non-resident for whom I am securing the order. Or even if for that even if not for that one non-resident, but for multiple non-residents, but those non-residents which are there are either controlled by one single non-resident or are controlling the other non-residents or are subject to the common control. So basically, if he is securing the orders either for one non-resident or the related parties to that non-resident, he will be considered as agent constituting the business connection. Clear? Provided that such business connection shall not include any business activity carried out through a broker, general commission agent, or any other agent having an independent status, if such broker, general commission agent, or any other agent having an independent status is acting in the ordinary course of business. What does it mean? That business connection term will exclude the agent who is operating as an independent agent. Independent agent means that he is working for multiple principals and not for only one principal. And who is acting in the ordinary course of business. That in the regular course of business, he enters into contracts with multiple non-residents and therefore he is an agent of independent status. If he is working only for one principal, it means that he is a dependent agent. So therefore, if you say business connection includes the business activity carried out by a dependent agent. Are you getting this point? So therefore, it excludes an independent agent acting in ordinary course of business. Are we clear? Then it says, provided further that where such broker, general commission agent, or any other agent works mainly or wholly on behalf of a non-resident, which is the principal non-resident, or on behalf of such non-resident and other non-residents which are controlled by the principal non-resident or have a controlling interest in the principal non-resident or are subject to the same common control as principal non-resident, he shall not be deemed to be a broker, general commission agent, or the agent of an independent status. So basically, what does it mean? That if the independent agent, what did I tell you, is the one who is not working for only one principal. If he is working for one principal, he will be a dependent agent. So if an agent is working for mainly or wholly for only one non-resident, then he is basically a dependent agent. He will not be considered independent. Or for non-residents which are subject to the common control, basically all the related party non-residents. So, a person is not independent agent if he mainly or wholly works for one non-resident or related non-residents. Is the dependent agent point clear to all of you? Yes. Is this clear? Yes or no? Yes, all the students, please tell me whether this particular point is clear. Now, you will ask me the question, ma'am, what kind of questions do we expect in exam around this area? So, students, around this area, the questions could be more on the front of the theory questions itself. You may get a case scenario to identify whether a particular person can be considered as the agent of the non-resident or whether he could be considered as constituting the P for the non-resident. Business connection for the non-resident. So these are the kind of questions you can expect in the exam around this particular point. So, but if you will know that, okay, see, you don't need to remember in a way, where you have to just mug up all these concepts. It's very straightforward. How you have to remember is that a business connection is not defined. It basically includes a dependent agent. It basically includes a dependent agent. And who is a dependent agent? One who is habitually concluding the contracts or habitually has an authority to conclude the contracts or plays a principal role leading to the conclusion of contracts or is maintaining the stock of goods habitually and delivering from that stock or is habitually securing the orders mainly or wholly for non-resident. It excludes an independent agent. Is this clear? Any questions, any doubts so far? So these are the very small theory questions you can get, but you will be able to secure the full marks if you write it properly. So if you're able to write here properly, demonstrate your relevant knowledge that you know this particular concept, it will be very straightforward. Clear? Fine. Now let us proceed further. There is this explanation 2A also included. Now what is this? So before we move towards explanation 2A, let me give you a brief background. So if you see here, what did I say? Is there a difference between doing business with India versus doing business in India? And all of you said, yes, there is a difference. With India means that we are basically located outside and providing the services to some Indian customer. And in India means where we have some amount of substantial presence in India. So means you were trying to equate in India with having some amount of physical presence in India by way of having an office, by way of having a dependent agent in India. Yes or no? Right? Now, in the times where we have almost all the activities entirely digitalized, it is quite possible that you may be doing every set of your transaction just outside India, but you may be earning huge sum of money from India because you are able to provide the same services without having any physical presence now. Isn't it? And that way, the country started losing a lot of taxes on these transactions, which had become highly digitalized. Because the business connection required the linkage between the activities and the income carried out. So basic income generating. So basically it's required that there has to be the activities carried out in India. Isn't it? So therefore, the Act was then amended. And this introduced the concept of significant economic presence. So if you see explanation 2A says that for the removal of doubts, it is hereby declared that the significant economic presence of a non-resident in India shall constitute business connection in India. So here the lawmakers realized that the definition of the permanent establishment business connection is now outdated because all of these requires having some amount of physical presence in the source country, which is not possible in the digital world. And therefore, they introduced this, or rather the OECD introduced this concept of significant economic presence. Which constitutes now business connection. What does SEP means? So significant economic presence for this purpose mean transaction in respect of any goods, services or property. It doesn't say transaction of goods. It says transaction in respect of any goods, services or property. In respect of is much wider than of. Transaction in respect of any goods means it could include the advertisement, it could include the marketing, it could include the sales function, everything. So transaction in respect of any goods, services or property carried out by a non-resident with any person in India. So what does it say? Transaction in respect of goods, services, property carried out by non-resident with any person in India. So any transactions the non-resident carries out with any person in India, which is what we were saying, doing business with India, is also now going to constitute business connection because doing business with India has now become part of the significant economic presence. What we are trying to say is that even if you do not have the physical activities being carried out in the source country, but you are still having this significant economic presence in the country because you are providing the services in our country by sitting outside, meaning you have an economic presence even if not physical presence. So transaction in respect of goods, services, property carried out by a non-resident with any person in India, including the provision of the download of data or software in India. Includes download of data or the software. So even if your software developed or data shared by you is downloaded in India, that will constitute the business connection in or significant economic presence in India. For this, there is a threshold given because if you look at it, it says if the aggregate of the payments arising from these transactions during the previous year exceeds such amount as may be prescribed. So the prescribed amount is 2 crore. If payment later than rupees 2 crores. If the payment is more than 2 crores to that non-resident, only then he will have the SCP. So they have kept a monetary limit over here. Second, it says systematic and continuous soliciting of the business activities or engaging in the interaction with the users in India. So, systematic and continuous soliciting of business activities or engaging in interaction with users in India, and the number of users as may be prescribed. So how many users are prescribed? 3 lakh users. So if the non-resident engages with the or interacts with 3 lakh users in India, it will constitute the business connection or significant economic presence in India. Now, what does the second clause mean? See, many of the businesses, for example, like WhatsApp, these digital platforms which are there, Instagram, Facebook, they generate the income by interacting with the users. So if they interact with more than 3 lakh users, if they have more than 3 lakh customers on their platform, users on their platform, they will constitute the significant economic presence in India, and by that way they will have business connection in India. Are we clear about this? Yes or no? Is significant economic presence clear to you, students? Yes? Yes, do you have any questions? Yes, fine. Now, let us read what it says further. Provided that the transactions or activities shall constitute the SEP in India, whether or not, meaning irrespective of, the agreement for such transactions is entered in India, or the non-resident has a residence or place of business in India, or the non-resident renders the services in India. So meaning it doesn't matter even if the agreements are not entered in India, even if the non-resident does not have a physical place of business in India, even if the non-resident is not coming here and rendering the services in India, irrespective of that, the SEP can be constituted if the non-resident has any transaction in respect of goods, services or property with the person in India, or it is engaged in the download of data or software, or it has the systematic and continuous soliciting of business activities, or it is engaging or interacting with the users in India, provided the thresholds are crossed. Are we clear? Now it says, provided further, only so much of the income as is attributable to the transactions or activities referred to in clause A or B, meaning these two clauses, shall be deemed to accrue or arise in India. Let's read explanation 3 also, and then we'll understand what this point says. Where a business is carried on in India through a person referred to in clause A, B, C of explanation 2. A, B, C of explanation 2 was what? Dependent agent. One who is concluding the contracts, securing the orders, delivering the stock, that person. So any business carried out in India through the agent, through a dependent agent, In respect of that person also, only so much of income as is attributable to the operations carried out in India shall be deemed to accrue or arise in India. Here also it is written this particular line only, but this is for SCP, this is for business connection. That only so much of income as is attributable to the transactions or activities shall be deemed to accrue or arise in India. What does it mean? Let us try and understand. See, this may not be that important from exam perspective, but I'm just making you understand from a more practical situation, right? So, let us understand what does it mean. See, students, now let's take an example to understand this in a better way. This is purely from practical insight that I'm giving you, just for you to understand what does the words in the section mean. So that you should not, think that this has not been taught to us. What does it mean? We do not understand. But this may not be very, very relevant from the exam perspective. Let's say I am a non-resident who has the sales in India of, let's say, rupees 100. Right? Now, will you tax entire 100 rupees because this non-resident has a business connection in India? The sales are generated from the activities carried out in India. Let's say there is no agent, but even if there is no agent, there can be still business connection, because business connection does not only mean that you have an agent. Business connection is a very wide term. As I said, it's not defined. So business connection is constituted only when you carry on the activities in India also, right? If you routinely do an organized activity in India, that will constitute business connection. Agent is just included in business connection, right? So let's say he is having the sales in India and he has a business connection constituted in India. Will you tax entire 100? Yes. Yes, Prashant, YouTube, Netflix also have the SCP in India. Will you tax entire 100 rupees in India if it has a business connection in India? Yes, students. No, Kirti, why? But this is arising out of business connection in India. Why you are not taxing entire 100? Think about it. See, 100 is the sales figure. What does the section start with? All income accruing or arising through or from a business connection in India. All income. Does the income is the gross receipts or income is the net income? It is the net income, right? As I told you, income is the profits. It is not the gross receipts, right? How do you compute the income? You compute as per your heads of income only, right? So, income is basically not 100. It is 100 minus the expenditure, right? Now, to earn this 100 rupees as income, I would have incurred purchase of, let's say, 80. Let's say marketing activity of, let's say, rupees 5. Let's say I have given the commission of, let's say, another rupees 5. Right? So let's say this 5 I have paid in India. This marketing I have done in India. But this purchase is, let's say, done from US. So my profit was only rupees 10. Now, will you tax this entire 10? Yes. Will you be taxing entire 10? Because now you said, ma'am, you should minus expenses. Income means the net income. The answer is no. Yes, Chinni, you are right. Yes, Kirti, correct. So we will not tax the entire 10. Why we will not tax the entire 10? Because, see, the profit that you earn, basic economics, is the result of demand and supply, right? Now, there is the demand in India, but whether the supply is also taking place in India, the answer is no. You got demand in India only because of the marketing activity carried out in India. Isn't it? So, therefore, what will happen is this entire 10 will not be taxable in India. Only that much portion of 10 will get taxed, which is attributable to operations carried out in India. Are all the operations carried out in India with respect to 10? The answer is no. What are the operations carried out in India? Only marketing and the sales function, right? Now you will say, ma'am, how will we identify? How will we distribute the proportion of 10 between India and the country of residence of non-resident? Let's say this non-resident is based out of China. How will we attribute 10 between India and China? Because China will say we have purchased in China, even though we have purchased from US, but the stock is coming first to China. We are packaging it in China and then selling it in India. So majority of the activities are happening in China. So India cannot say we will tax entire 10 because that will result in double taxation and extra territorial taxation because India में जब activities ही नहीं हुए हैं to earn that 10, how can India tax entire 10? Are you getting this? So how will we come to the proportion to break this 10 between India and China? For that, we have Rule 10. We'll not get into Rule 10, but Rule 10 talks about how to decide the proportion. This is the AO will decide. But usually it is percentage of the turnover or based on the comparable profit margins of similar enterprise. So if the similar entities are earning, let's say, 5% in India, so they will take that. Or they will take the percentage of turnover. Let's say they will decide that, the general percentage should be 10%, so they will allocate 10% of 100 in India. So 10% of 10 in India. So this is how they will decide. Are we clear? So not entire 10 will be taxable in India. So that's what your section 911 was saying to you. What did it say? That where a business is carried out in India through an agent or through the SEP activities, only so much of income as is attributable to the operations carried out in India will be deemed to accrue or arise in India. Are we clear, students? Yes or no? Is this point clear to everyone? So this is not very relevant from exam, but will help you to understand the act practically. Clear? Let's move forward towards the last point in business connection. It says, for the removal of doubts, it is hereby declared, explanation 3a, income attributable to the operations carried out in India as referred to in explanation 1 shall include income from, shall include the income from advertisement which targets a customer who resides in India or a customer who accesses the advertisement through the internet protocol address located in India. So basically, this will include, so this includes income from advertisement targeting customers in India. So, there are a lot of companies who are directing the advertisements toward you. For example, Adidas, Nike, all of these advertisements, let's say, for example, you can see it on Instagram, on the Facebook, on the Google as the banners, besides whatever website you are accessing. So if these advertisements are targeting towards the Indian customers, and Google is earning, or Instagram is earning, or Facebook is earning income from those advertisements, because Instagram is allowing Nike or Adidas to display these advertisements to you, and they give the space for a fee. So basically, Nike will pay the fees to Instagram to display their advertisements on Instagram, or Nike will pay the fees to Facebook to display their ad on Facebook, right? Earlier, we used to have billboards, right? When you walk or when you just drive, you see a lot of big billboards. So the companies used to pay to these advertisement companies to display their billboards. Now we have digital ads. So whatever Google, Instagram, Facebook will earn from the advertisements which are targeting customers in India, that will be considered as income from the operations in India. Or sale of data collected from a person who resides in India or from a person who uses the Indian IP. So, sale of data collected from Indian person. So, for example, let's say Instagram is every day collecting our data. That's why, you see the same kind of reels or whatever you chat on WhatsApp. Let's say, for example, you're chatting with your friend that, I'm thinking of buying these Nike shoes. And immediately you go on Google, you will see that you have the ads of Nike shoe, even if you have not still searched for it. Or when you are even talking to your friend physically, you will see immediately on Instagram that you are able to see the Nike shoes. Or let's say, for example, I'm telling you, now, the lecture is going to get over, so I'm wanting to have my dinner, so I'll order from Zepto Cafe. And immediately Zepto will be showing on my Instagram. So, the Instagram is collecting my data and selling it to Zepto or Blinkit. So, sale of data collected from a person who is resident in India. So, Instagram is earning by selling my data. Or the income that which is generated from that sale of data will also be considered as income from the operations in India. Third, sale of goods or services using the data collected from a person who is resident in India. So, income from sale of goods or services using the data collected from person in. So basically now when I will buy on Zepto, by clicking on that ad which I saw, so then whatever income Zepto will also earn from the sale it is making to me, that will also be said to be income from operations in India, because this sale was generated based on the data collected of mine. So all of this income will be taxable income. Are we clear, students? Is this clear about the business connection, SCP? Yes, any questions, any doubt? Yes or no? Fine. Is this clear? Yes, students, is this clear? Okay, perfect. Now, let us go back to the explanation 1. Explanation 1 is basically an exclusion. What does it say? For the purpose of this clause, in the case of a business, other than the business having business connection in India on account of the SCP, of which all the operations are not carried out in India, the income of the business deemed under this clause to accrue or arise in India shall only be such part of the income as is reasonably attributable to the operations carried out in India. So the same thing, that only the income which is arising in India will be only the income which is attributable to the operations carried out in India. So out of the 10 rupees profit, we cannot tax entire 10 because in India, the activities or operations carried out are only the marketing function and the sales function. So entire 10 cannot be India's income. So we will have to break that 10 between India and China. Clear? In the case of a non-resident, no income shall be deemed to accrue or arise in India through or from the operations which are confined to the purchase of goods in India for the purpose of export. So if you are purchasing the goods in India and then again exporting outside India, so income for that non-resident will not be deemed to accrue or arise in India. So this is an exclusion. In the case of a non-resident being a person engaged in the business of running a news agency or of publishing the newspapers, magazines or journals, no income shall be deemed to accrue or arise in India to him through or from the activities which are confined to the collection of the news and views in India for transmission out of India. So basically, if you're collecting the news in India or views in India and then transmitting the news outside India, there will not be any income accruing or arising. For example, BBC. BBC is running a news agency, right? For BBC, there will not be any income arising in India if it is just collecting the news in India and then transmitting globally. Discovery Channel. All of these, they will have no income deemed to accrue or arise. Third, in the case of a non-resident, who is an individual who is not a citizen of India or a partnership firm who does not have any partner who is a citizen or resident of India, meaning a completely non-resident partnership firm, a non-citizen of India, or a company which does not have any shareholder who is a citizen or resident of India. No income shall be deemed to accrue or arise in India to such individual firm or company through or from the operations which are confined to the shooting of any cinematograph film in India. So if, let's say, for example, there is some non-resident company, firm or individual coming and shooting a film here, doing a scene over here for a film, the income will not be deemed to accrue or arise in India. This is to promote the foreign agencies to shoot the films in India. In the case of a foreign company engaged in the business of mining of diamonds, no income shall be deemed to accrue or arise in India to it through or from the activities which are confined to the display of uncut and unassorted diamond in the SEZ. Are we clear? So this completes your topic of the business connection. Do you have any questions? If yes, please feel free to ask me any questions that you have. Otherwise, we'll proceed on the last area of the 911. So we have done business connection, we have done the income from the property, we have done the income from asset or source of income in India. We are left with the last part of 911. Any questions, any doubt? So from these, all the exclusions, what is important to remember is, students, if you are importing the goods, purchasing the goods for the purpose of export, if you are a non-resident, income will not be deemed to accrue or arise in it. Clear? Any questions, any doubts? No? Okay, let's move towards the last part of 9.1. What was the last part? Through the transfer of a capital asset situated in India. Right? Through the transfer of a capital asset situated in India. Now, capital asset is defined under 214. Right? Here, they have not used the term asset, but a capital asset. And capital asset is defined under 240. Now, what does it say? That even if the transfer takes place outside India, the payment takes place for that transfer outside India. But still, if the capital asset is situated in India, the income will be deemed to accrue or arise in India. Let's say there is one non-resident. Let's say there was Mr. A and Mr. B. Now, Mr. B's parents were living in India in the house of Mr. A on rent. Now, Mr. B thinks that, they are living in the same house on rent for so long. He asked Mr. A that, look, do you want to sell your house? Are you interested? He says, okay, yes, I'm interested. What is the consideration you'll pay? He said, let's say I'm agreeing to pay $1 million. He said, okay, done. I'm ready to sell my house. So Mr. A sells the house to Mr. B. The contract is signed outside India. The consideration is paid in US dollar. Both buyer and seller are non-resident. Whether the income will accrue or arise in India, one can say no, because everything is taking place outside India. Just the house is in India. But 911 says that income through the transfer of capital assets situated in India will be deemed to accrue or arise in India. Are we clear? Now, there is a catch over here. Now, let me tell you what happens in the case. Let me give you the example. This was a practical case. Let's say there is a company A, which is the resident of, which is, let's say, resident of UK. There's a company A, Now this has, let's say, a subsidiary in Mauritius. Which has a further step down subsidiary, company C, which is a resident of India. Now, if you look into the balance sheet of company B, this is 100% and this is also 100%. In the balance sheet of company B, what will appear on the liability side? Yes, what will appear on the liability side on the balance sheet of company B? Yes, students, accounting question to you. What will appear on the liability side of company B?
Share capital.
Share capital. Share capital is held by whom?
Resident of UK company.
Sorry?
Company A.
Company A. Okay. So here I have the share capital which is held by company A. Right? What will be on the asset side?
Investment in subsidiary.
Correct. Investment in company C. Okay. Now, yes, Kirti, correct. Now, this company is an active company. Active meaning it has the active business in India. Active business meaning all the activities, operations in India. Fine. So now this is, let's say, for example, a listed company. Right? Now, as the company will perform better, the company C, what will happen? The value of this investment will start growing. And if the value of this investment will start growing, what will happen? If you convert the balance sheet to the fair market value, the value of this share capital will also start growing. Right? So basically, the shares of this company are deriving the value from Indian shares. Yes, can we say that? Yes or no? Can we say that the shares of company B are deriving the value from Indian shares? Yes or no? Yes, everyone? Fine. Now, this company has prospered really well over the years. And now company A, feels that I should exit from the Indian market. So, usually when the businesses do well, the investors just then exit and realize their money, right? So, what company A does is, company A transfers the shares of company B to, let's say, company X, which is also, let's say, resident of UK. So it is not selling the shares of company C, it is selling the shares of company B. Because if it sells the shares of company B, in effect, what will happen? Company X will become the new shareholder of company B, and in effect, X will have the control over the C also, right? So in effect, the business of the C is getting transferred by selling the company B itself. Because company B has no other assets, it has only company C investment. Alright. Now you will ask, why is it not selling the business of company C directly? Because, see, if it sells the shares of company C, there will be capital gain tax in India. Because what does it say? The Act says, all income accruing or arising through the transfer of a capital asset situated in India. So if I sell the shares of company C, there would be income deemed to accrue or arise in India, right? So if instead of selling company B shares, company C shares are sold, there will be transfer of capital asset situated in India, because shares are capital asset, right? And this will lead to income or capital gain deemed to accrue or arise in India, right? So what will happen? I will have to pay the taxes in India, right? Is everybody on the same page till now? Everybody clear about this transaction? Why we are selling company B shares instead of C? Is everybody understanding this? Yes or no? I need the answers. Yes or no? Yes? So, that is the reason why I have selected company B, because company B is not a resident of India, or the shares of company B, are they situated in India? The answer is no. Shares of company B are situated in Mauritius, right? So if I sell the shares of company B, in effect, I am transferring the business in India only and still not paying any capital gain tax in India. Clear? Yes or no? I need the answer so that I know you are understanding. Yes, students. Is this clear, this much part? Because now we are going to get into a little more complexity. Fine. Now, this was the loophole which was realized by the tax authority in the case of Vodafone. You may not know, but at least when I was very young, I was very small that time, there used to be the Hutch in India before Vodafone. Now that we have Vodafone, but at that point in time, before Vodafone, this telecom license was held by Hutch. I'm not sure if you've ever seen the Hutch cards, but there used to be the Hutch in India. So Hutch sold its Indian business by way of selling the Mauritius company to Vodafone UK. Right? If you have seen, there were Hutch. Yes, Jenny, you are right. I was going to say this. There was this always, the Hutch was known by the advertisement of that cute dog. Zuzu. Yes, it was called as Zuzu. It was always, that ad. So when I was also very small, we used to, look at that Hutch cute dog, and that was the Hutch company, which sold its business to now that we have the Vodafone. It was exactly how the sale was made to avoid the capital gain. And the tax authorities observed that this is nothing but, in effect, by selling the Mauritius company shares, what they are trying to do is they are indeed selling the Indian business and still avoiding the taxes in India. The matter reached to Supreme Court. Supreme Court gave the judgment in the favor of the Hutch. They said under the Act is very pretty clear. It says that only when there is a transfer of a capital asset situated in India, only then India can tax it. There is no transfer of a capital asset situated in India. Is there a transfer of capital assets situated in India? Answer is no. Shares of Mauritius company are situated in Mauritius. So revenue then, started innovating the new arguments. They said, even if the capital asset situated in India is not the shares, the capital asset is property of any kind. Capital asset under 214 means what? Property of any kind. Property is meaning what? The bundle of rights. So what they have done is they have transferred the management interest, controlling interest in India, which is a separate right? So in effect, even though they have sold the shares of Mauritius company, but they have transferred the management rights of the Indian company. They have transferred the controlling interest in the Indian company. And capital asset means the property of any kind. And property means the bundle of rights. So therefore, there is a transfer of capital assets situated. But the Supreme Court said no. Can you value the management rights? Can you value the controlling interest? Can you assign any value to it separately? The answer is no. There is the shares of Mauritius company as a whole are sold. You cannot dissect it. That is not a separate capital asset which is identifiable in its own sense. So what is transferred is the share of Mauritius company that is not situated in India. So therefore, there will not be any capital gain in India deemed to occur or arise in India. The revenue was disappointed with the judgment of Supreme Court. They amended the Act retrospectively. Now they have made it prospective after all, the litigations by the Vodafone, by different companies on whom this particular clause was triggered. Globally, they had issued the litigation orders over the Indian government, that the Indian government is engaging in tax terrorism by introducing such retrospective amendment. Because how can they know in the past that they had to do something like this? So after that, the government made it prospective. But what was the amendment? Let us try and understand. So explanation 5 is what we will look at. So explanation 5 says, for the removal of the doubts, it is hereby clarified that an asset or a capital asset, being any share or interest in a company or any entity registered or incorporated outside India, shall be deemed to be and shall always deemed to have been situated in India. So what they are saying is that the asset or the capital asset being the share of the foreign company. So this is the capital asset which is sold, which is the share of foreign company. This shall be deemed to be situated in India. So they are shifting the situs of the share of the foreign company and saying that this is deemed to be situated in India. If they say that this is deemed to be situated in India, what will happen? Section 911 will get triggered. What was 911? It was saying income accruing or arising through the transfer of capital asset situated in India. Right? So if they say that this share of the foreign company is situated or is deemed to be situated in India, meaning automatically when these shares will be transferred, 911 will get triggered. They are saying that the company B shares are deemed to be situated in India. Meaning, if the shares of the company B are now transferred, there will be the income accruing or arising to the transfer of this company B shares will be deemed to accrue or arise in India. So, capital gain on sale of company B shares shall be deemed to accrue or arise in India. Are you getting this point? Yes or no? Now, when it can be said to be deemed to be situated in India? If the share or interest derives, if the share of the company B derives directly or indirectly, its value substantially from the assets located in India. So when it will be said to be deemed to be situated in India, if the shares of company B are deriving the value from the assets located in India. Is it company B deriving the value from the Indian shares? Answer is yes. So shares of company B are deemed to be situated in India, and therefore the capital gain arising on the sale of company B shares will be also deemed to accrue or arise in India. Is this particular point clear, students? Yes or no? Yes or no? Yes. Is this clear up till now?
Ma'am,
Yes.
ma'am, if company A sold itself share to company X, then what will the treatment?
How can company A sell its own shares to company X?
Ma'am, if there is another parent company of company A,
Yeah. Then also
100%,
the same, see, then also you have to identify whether the shares of company A derive the value substantially from the Indian shares, because the word used is directly or indirectly. It doesn't say only directly. So it says, explanation 5 says that any capital asset which is a foreign company shares shall be deemed to be situated in India if the share or interest derives directly or indirectly. So even if you have an indirect holding in India, if the value of company A shares then is deriving from the Indian asset, Indian shares, the company A's shares will also be considered to be deemed to be situated in. Are we clear? Yes. So just write down here. Shares of foreign company shall be deemed to be situated in India if share of foreign company derives directly or indirectly value substantially from assets located in India. And if that be the case, the capital gain shall be deemed to accrue or arise in India. Now, what do we mean by substantially from Indian assets? Whether it should be a wholly owned subsidiary only, then you will have this situation. By the way, this is called as indirect transfer of assets, because indirectly you are transferring the Indian assets. So, but what is the meaning of substantial? They have provided this. So, if you see explanation 6, for the purposes of this clause, it is hereby declared that the share or interest referred to in explanation 5 shall be deemed to derive its value substantially from the assets, whether tangible or intangible, located in India, if on the specified date, the value of such assets exceeds the amount of 10 crore rupees, and so this is the and condition, represents at least 50% of the value of all the assets owned by the company or the entity as the case may be. What is the value of assets? Value shall be the fair market value as on the specified date of such asset without reducing the liabilities. Are we clear? So basically what they are trying to suggest is that what do we mean by substantial? Substantially means that the value of the assets in my balance sheet in the Mauritius company's books. So basically this investment, this should be more than 10 crore rupees. So value of this investment should be more than rupees 10 crores and plus should be greater than 50% of the total FMV of all assets. So here we have to consider the fair market value. So fair market value should be more than 10 crores and it should be at least 50% of all the assets of this particular company. Now you have to take the FMV on which date? It says FMV you have to consider as on the specified date. Because it's a value if on the specified date the value of the assets exceed the 10 crore. Now what is a specified date? So again they have defined the specified date means the date on which the accounting period of the entity ends preceding the date of transfer. So basically the end of the accounting period, 31st March, 31st December, whatever accounting period you have. Or the date of transfer if the book value of the assets of the company on the date of the transfer exceeds the book value of the assets as on the date which is the accounting period date by 15%. Now this is very confusing. Let us understand this, what it is trying to say. So first of all, even before I decide that whether the Mauritius company has been deriving the value substantially from the Indian assets, how will I decide that? I will have to check whether the FMV of the Indian assets is more than 10 crore and is more than 50% of the FMV of all the assets that the Mauritius company has. But how do I take the FMV? On which date? Whether I should take on the date of transfer or whether I should take on the accounting period date before the date of transfer. So for that I need to understand what is the specified date. So step 1 will be to identify the specified date. For determining on which date the FMV has to be taken. Right? So किस दिन का fair market value लेना है? So for deciding that, we need to first decide what is the specified date. Now specified date which is there, this is said as you have to take either the accounting period date, or you need to take is the date of transfer. But for that, you need to see the condition which is there. What was the condition? The condition was that if the book value of the assets of the foreign company as on the date of transfer, you need to ask the question, book value of the assets. Here we are not taking the FMV. Here we are seeing the book value. So book value of the assets of the foreign company, whether it exceeds the book value of the assets as on the accounting year end by 15%. Book value of assets of foreign company on the date of transfer exceed the book value of assets of foreign company on the accounting year end. By how much? 15%. This is the first question you need to ask. Now, in simpler terms, what this will mean? So, this will mean that you take the book value of the assets as on the date of transfer and see whether it exceeds by 15% of the book value of assets as on the accounting year end date. So 115% of the accounting year end date, whatever is the book value, that you will take. If the answer is yes, then in that case, you will take the date of transfer. If the answer is no, you will take the date of accounting year end. So now you have identified what is the specified date, right? Then the step 2 is to determine if the value of, or to determine if the shares of FO derive value substantially from Indian assets. Now, how will you decide that? A, FMV of Indian assets as on specified date is greater than rupees 10 crore plus FMV of Indian assets on the specified date is greater than 50% of the FMV of total assets. Are we clear, students? Is this clear? If yes, the value of the shares of the foreign company will then be deemed to be situated in India. And then the capital gain will be deemed to arise in India. Is this particular point clear? Yes or no? All of you? Yes? Kirti, your question, if the value of shares of Indian company increases, then also the value of the shares of its holding foreign company increases? Absolutely yes. That's what we saw, right? So if you see, Kirti, here what we have written is that the Indian business was performing well. So as and when the Indian investment grew, the share capital of the foreign company is also growing. So that's the reason why the Indian tax authorities targeted this, because they realized that the shares of the foreign company, even though they were deriving the value substantially from Indian assets, but still these companies were not paying any taxes in India. Clear? So with this, we will stop here for today, but we will continue this in the next class also. Kirti, will it be vice versa also? No. See, I mean, Indian company cannot derive its value from the holding company. Why? Because the liability side derives the value from the asset side, right? It cannot be a vice versa, that the asset side cannot. So if you have more liabilities, the assets will in fact go down. It will not increase, right? So it can't be vice versa. Okay. In case there are no further questions, I would request you to please revise these topics, because these are important from the theory perspective. Also, we'll look at one of the examples to understand this indirect transfer in the next class. So thank you so much. See you in the next class. We can close the session. Yes. Good night.